We're coming off the back of a very busy first week of October, and now we're on the second week of October, where we're still kind of relying on the news from the previous week. However, we have seen employment data coming in very strong, and this has had a bit of impact in the market. My name is Samson Mzera, and we'll be talking about this and more, including gold and the dollar index, and what other pair to look at in this session of the Market Watch series. So be sure to like, subscribe, and share. So if you look at the dollar index, you can see that on the chart, especially on the 4-hour time frame, we have seen that change of character from that downtrend. And this has been as a result of a couple of things. Number one was the employment openings data and the employment data that came in last week. From the expectations we had on Monday, the dollar index started rising very sharply. And finally, towards Friday, when that NFP reading came in better than expected, we did see that final jump in the dollar index. And this is true also for other pairs. For example, if you look at EURUSD, AUD-USD, GBP-USD, we all saw that similar reaction in anticipation of a stronger dollar. And that is what held us for last week and the first half of this week. However, we are not out of the woods, as still we have the inflation report coming in this week. And the expectation already is that we are expecting a lower inflation reading. And this is already having a big impact on the market. For example, if you look at that jump from NFP, we are seeing the dollar consolidating in most of these pairs. For example, in GBP USD or in Euro USD, we have seen some consolidation, and possibly we might start seeing movements to fill that imbalance that we're seeing as we anticipate that lower inflation reading coming in on Thursday this week. So at the moment, yes, we have that theme of a stronger dollar, but the market looks very extended, and we might see signs of failure for that trend to continue, at least on the short term. And this is what is guiding our traders, that consolidation that you're seeing over there, especially on Euro USD, on the DXY, and on other currencies. If you look at gold, first let's understand why gold has been rising all this while. The reason it's been rising is because of China and other central banks buying a lot of gold in the past, or in the start of the year towards the middle of the year. And this is what caused that demand in gold, and that reinforcing factor of tensions in the Middle East and things like that. That is what made gold go higher and higher. However, now that China announced a stimulus package for the economy, that means they are diverting funds away from purchases of, for example, gold into the economy, into the real estate sector. And that is why we started seeing that final consolidation in gold. Now, why hasn't gold dropped as of yet? We do have those Middle Eastern tensions that are still piling up, and that is what the market is afraid of. So we have managed to find support in gold solely because of that. Because if you look at the other currencies in comparison to gold, it ought to have been in a downtrend because of the dollar strength. That is why when we looked at the NFP readings, it didn't really have much of an impact on gold as it did on the other assets. As long as tensions in the Middle East move in a predictable manner, it's not going to cause any uncertainty, and it might not lead to gold going higher. However, if things start moving in an unpredictable manner, that is when we start seeing a rush to gold. In the meantime, we are expecting movement in the dollar to play a key role in the trajectory of gold in the short term. For example, we have that inflation reading that we've talked about, and if we see the reading coming in lower, then that might have a temporary effect of sending gold a bit higher from where it is. We are at a key support level, and we will be monitoring this level to see whether traders are willing to take gold lower, or this is a key demand zone that we might start seeing that expectation of a weaker dollar play into gold and us seeing gold move higher. So this is where we'll be looking at for any signs of a market reaction or beliefs that we might start seeing a weaker dollar. Now we'll be looking at this going into Wednesday and Thursday before the inflation report. However, any move lower should be met with caution, because we are still expecting a slight weakness in the dollar as we approach that inflation reading. And having said that, thank you for tuning in to this session of the Market Watch series. And if you want to trade any of these instruments, visit hfm.com or the description below. And see you in the next one.